My mission with the Mortgage Report is simple: to save you money. I'm here to provide weekly insight into the market so you can make the best buying decision. I want you to know where interest rates are headed, and I promise to let you know my lock or float position. The Mortgage Report starts now. Hey, what's up, BobMortgage Nation? Hey, last week was a really busy week. We got an agreement towards complete denuclearization on the Korean Peninsula, which big news, right? We also had the Fed raise interest rates by 25 basis points. Now that was expected, but what wasn't expected was the hawkish tone. Now the Fed announced that they expected 4 rate hikes this year instead of 3. And the bigger news is the Fed President, Jerome Powell, said he will begin press conferences following each meeting starting in January of 2019. Now, the big deal with that is, and why that's so important, is now the Fed has the opportunity to raise rates after every meeting. So we're going to be very cautious and really watching those comments leading up to and coming out of the Fed meetings, even more so now, because he's going to start those press conferences in January. On Friday of last week, we had a really nice opening for bonds. And that was because President Trump was in the news and he announced trade. Well, it's basically because of trade concerns, because he announced the $50 billion in tariffs against China. Now, he also vowed to raise those tariffs if China were to retaliate, which they've already agreed to. Now, even with those positive openings for bonds on Friday, we didn't have enough momentum to break above that 50-day moving average. Okay, we're kind of in a sideways trading range right now between the 25-day and the 50-day moving average. Okay, so bottom line right now, I'm carefully floating. Now, when the Fed announced that they were going to raise rates, we already expected it. The market already had the 25 basis points priced in. Now, I did quickly convert coming out of that meeting, the market-related news leading out of the meeting, the comments by Powell. I converted to a lock position for those clients that didn't want to lock, but were closing in the next 10 to 15 days. They were waiting for that announcement. We converted to a lock position because of that hawkish tone and them stating that they're going to raise interest rates 4 times, expected 4 times this year in 2018 versus 3. So we gave them a little bit of protection there. And then coming out of that news, and based on what we've seen over the last day and a half with President Trump's announcements on the tariffs, we converted to a floating position because that typically would cause the markets to move down. On the stock side of it, money coming out of stocks and pushing money into the bond markets for the safe havens. And that's proved pretty well. And so we got some positive pickup in the last 24 hours on the bond market side. So it may not have saved a full 1/8 of a point in interest rates, but it did save the cost to get certain rates. So the discount points that it may take for a client to buy down that rate. So we help save clients some money there. Now, I'm carefully floating because it is a sideways trading range, okay? And we know the market, typically the bonds will fall a lot quicker than they will rise. So I'm really educating my clients, and I'd advise you guys to get with your lender if you're not using us, but to talk to your lender about the difference in an 1/8 of a point and what does that really mean in the monthly payment and the amount of interest that you're going to be paying over the period of time that you're going to be in the house. That's going to be really important to understand, which is that total cost of ownership. All right, look, I've been a mortgage advisor for over 20 years, been blessed to provide financing to over 25,000 families during that time period. I watch the markets on a daily basis to make sure I can get you the right home loan at the right price. Give me a call. With Bob Mortgage, your dream loan is already within your reach.